All right, good afternoon, and we're live. It's Lumida Non-Consensus Investing. It is Monday, almost 4 o'clock Eastern Time. This is the Non-Consensus Investing podcast. I try to do this weekly at the top of the week, and you can find this on YouTube or Spotify, Apple, or wherever you download your podcasts. There's so much happening. Once again, I made a joke that we should rename the Lumida Ledger newsletter to What a Week, because it feels like every week is just such a notable week, right? So we've been tracking the tariffs theme. Now, recently we saw Microsoft canceling some data center projects. And we saw Dylan Patel say that's old news. Then we see Stevie Cohen on Friday, 2072, founder, talking about economic slowdown. There's so much to process. We write a lot about all this in the Lumida Ledger, by the way, in the newsletter. I strongly recommend you take a look at it there. I just try to identify and call out, I think, the main ideas here and try to bring it together. But I do recommend taking a look at that. And really, I recommend taking a look at the last three. I think we've been, correct in identifying the bubble in quality and the bubble in animal spirits. Right? And those bubbles have burst. I want to spend time talking about that. I want to spend a few minutes talking about thematic analysis and positioning. Okay. First question, is the bull market over? No, the bull market's not over. Okay. Everyone wants to know, is the bull market over? The bull market is not over. So we can explain why later, but I'm trying to just be a little bit punchy here. Do you need shifts in positioning? Yes, you do. Shifts in positioning matter. Look at what's working today in the market. I think Mr. Market is actually showing his hand right now, and the best performers are categories we like and have been talking about the last few months: healthcare and financials. Financials got overbought, but now they're getting attractive again, especially the regional banks. In fact, we were buying both of these names this morning in those categories. We'll come back to positioning in a bit. There's a lot to discuss there, including around China and other categories like industrials and small caps and the data center theme. There's so much going on. Okay. First off, hope you all had a good weekend. My kids and I, we watched The Parent Trap, the original, the OG version. I'm still, they're still at the age where I get to pick the music in the movies and really program for them. They love my program because every movie I deliver for them is just a winner. So now they're like, Dad, whatever movie you want to watch, just go. So I watched Parent Trap with them. They had a lot of fun. They understood the concept of twins, which is kind of a wild concept from a identity perspective. So they learned this concept of twins and identity. Like, there are a few things more fundamental to understanding than the concept of identity, right? So that was fun. I took my oldest son skiing. I didn't grow up skiing, but there's a mountain 15 minutes from where we live. Mountain's a strong word. Maybe it's like a glorified mountain. It's like a hill. It's got a couple slopes. My legs always figure out how to ski at the end of every season. Then I restart. I mostly do like blues and greens. I enjoy the greens. I'll do blues for more challenging. And I always forget that my legs forget every season. So I put my son in a ski school, and then I go up just like the nearest mountain. Again, I don't even look at what kind of grade hill is it? Just get on it. There's a guy next to me. I'm like, hey, so what hill is this? He's like, oh, this is a black diamond. I was like, what are you talking about? So that was how I enjoyed the hill. So, I get off the mountain and I'm like, all right, well, it's got to go back to the basics, get back to skills, get back to technique, try to remember what works, maintain a positive psychology. And let me see, I got to shift my audio. 1 second. Can you all hear me? Is this audio working? Okay. I think we'll have to make do with that. So, and as I'm maneuvering down the hill, I saw this other dad who was at the top of the hill watching me, trying to maneuver my way down. And I knew he really wasn't a skier either. He had enrolled his kids into ski camp. He didn't have any gear. And he's watching me, struggle for like 10 or 15 minutes. Or at least that's how it felt in my head. Maybe it was 5 minutes. It really feels like an eternity when you're in that position. And then sure enough, I get down the hill and I look back and I see, he's now making his way down the hill. I said, that's kind of interesting. Here I am struggling to learn something new and get down the hill. And maybe that struggling was his inspiration and his motivation and his opportunity. So, if you're struggling out there, maybe, there's someone else that can, uh, either you can inspire, or maybe you can learn from someone else too, right? So much of it is psychology. It really is. In life and in markets, it's all about psychology and the attitude that you have towards challenges. Anyway, that was my learning this week, and I thought I'd share that with you. So, big highlights this week. We got Nvidia on Wednesday. They'll report after the close. Uh, Obviously, a lot's turning on that. I saw a meme of Nvidia holding the world on its shoulder. It's like Nvidia. I think it's a great meme. Feels like it happens every quarter. Nvidia will beat and beat as they always do. That doesn't really matter. What matters is how will the market respond to Nvidia. I don't think you'll get a large move in one way or the other, because there's so much options activity in Nvidia that usually the movements take place within the implied volatility of what the options market suggests the move will be. But it will set the tone for the AI and the data center theme, which has come under an incredible amount of pressure, really, since the last Thursday and Friday. I want to talk more about that also. I expect we'll hear Jensen talk about sovereign AI. And, there are a lot of movements happening with the semiconductors and policy, right? Trump wants Taiwan Semiconductor to build a foundry really in the United States. And I don't think he'll put tariffs on Taiwan Semiconductor. How can you? That would debilitate American innovation because importers pay these tariffs. So semis are in the news, and the policy around semis. You have Home Depot reporting and Lowe's, so get a read on the housing market and building products, which have not been doing well because mortgage rates are elevated. And Bessent last week goes on Bloomberg surveillance talking about how he wants to bring rates down and mortgages down. Meanwhile, Druckenmiller has been saying like Trump is inflationary. So there are a lot of cross currents on the inflation front. On Friday, we'll get the PCE report on inflation. That'll be the number one report to focus on. It's the focus of the Fed. Also, you've got talk about kind of a growth scare out there in the market. It seems to happen every time this year. In fact, I noted on Twitter that it feels awfully similar to last year at this time. And you also had a similar kind of fear in the market. I don't share those concerns and fears, to be candid. I think these are just kind of seasonal fluctuations, weather issues, all the rest. I just don't see the weakness in earnings reports. In fact, what I see is animal spirits in the real economy, not animal spirits in the stock market. That bubble's burst. We'll talk about that. But animal spirits in the real economy. When I talk individually, whether it's with our clients or people we just do business with, people are optimistic about their prospects, and they're making decisions that lead to more investing and activity and hiring too. They're excited about Doge, despite what you might be hearing or reading elsewhere. Like, I don't know anyone that's not really excited about that. It's kind of funny because when you listen to a Sunday talk show or you read a newspaper, you might think very differently or get a different perception. But uh, people I'm talking to are generally pretty optimistic about that. I talk to people from different states of different political dispositions as well. I understand that I have some kind of bias in terms of my reference frame, but you try to be conscious about those. And I think overall people look forward to that. Although there's some anxiety around other things, right? We had this talks of a global peace dividend last not too long ago, right? And that obviously fell apart. And so that created some increased risk aversion. So a lot of these cross-cutting piece of information that have created a bit more anxiety. And, we really did have a bubble in quality stocks, and we had a bubble in animal spirits. We had twin bubbles. And the funny thing about that is animal spirits are the exact opposite of quality stocks, right? Quality stocks are businesses that are seemingly indestructible, like Walmart and FICO and Exxon and Costco, right? That's what you learn are quality businesses. And they got more expensive than Nvidia They broke the speed of light rule. Thou shalt not invest in stocks that are more expensive than Nvidia on a 4 PE basis, or even trailing. Pick whichever one you want. And then at the same time, you've seen that in the animal spirits category, right? You had Palantir, Reddit, Robinhood, and others. And the canary in the coal mine for all this was crypto assets, which haven't gone anywhere in 3 months. MicroStrategy was the first to really break down a few months ago. And you've seen that in other categories, right? In big tech, Meta had a fantastic 20-day run, and in 2 days they gave back 12 of those days ish. Think about that. It's now back to the 1 day after its earnings report. That's a good lesson there. You don't have to chase. Just wait, be patient, put on your watch list, wait for a good entry when no one's talking about it. Okay, so let me just show you a little bit more what I mean by the bubble in quality and the bubble in animal spirits. I have 2 newsletters talking about this in detail. I recommend you take a look at it because it's going to go more deeper, I guess more deeply than I will, or have really time to here. All right, yeah, so this is our Lumida ledger. You can find it at ledger.lumida Wealth. So 2 weeks ago, we wrote about the bubble in quality. Okay, so these were some of the stocks we identified then. This is Costco. Look at this. This is Costco. This is Walmart. We're talking about Meta. And we like Meta too. It's a great business, but not all businesses are worth buying at certain prices. Palantir 200 times, CrowdStrike 100 times, Axon 116, MongoDB 91, ARM 97. I mean, that's a bubble. That's what a bubble is. If you want to know how to identify a bubble, that's what you do. You can screen for these names too. And if you take a look at those names now, I mean, these things have been absolutely destroyed, right? Axon, look at this thing. It's 85 PE down from 113. Just destroyed, right? Look at FICO. FICO is one of the first ones to melt as well. Bit of a leading indicator there. Let's take a look at Palantir, right? Remember, Palantir only knew how to go up, down 11% today. We actually discussed Palantir each of the last 3 weeks. You should take a look at how we were studying this move. There's a lot of damage in animal spirits. How about MongoDB? I mean, software in general. I'm not picking on MongoDB. It's just emblematic of an idea. I mean, it's 87 times forward PE. Is that a bargain now? I'd say no, it's not. It's a wonderful business though. But price is what you pay and value is what you get. So you could go on and on. I mean, it's just this is Team Atlassian. Intuitive Surgical has done a bit better. It's in the healthcare category. It hasn't really broken yet. So not everything has, but outside healthcare, it's been rough going. And I'm trying to do my most recent letter. So we talked about animal spirits topping out soon. Last week we wrote animal spirits will top out soon. This is exactly what we shared. And this week, in fact, we've seen really the breakdown in animal spirits. I wrote, this is 2 Sundays ago, now's the time to play defense. I mean, kind of everything was overbought. Not just US equities, but like China was overbought. Brazil, Brazil was overbought. South Korea, right? It's like, and when everything's expensive, then there's nothing to buy. And everyone wakes up and realizes it the same day, and they start rotating to other kinds of areas. And we've seen that play out. Then you had, of course, this news from Stevie Cohen, where on Friday, I'm sure that didn't help markets. Markets looked like they were stabilizing. Then Steve Cohen said, "Hey, look, I think you could get a growth slowdown here." I'm not of that view, but that kind of doesn't really matter. You never actually get to see whether your view is correct. Markets are perpetual discounting machines, right? Remember around August 7th when the non-farm payrolls missed and markets tanked, we were also the view that there's no recession. But you didn't know that until September. But by the time September rolls around, the markets are trying to sort out inflation and Fed rate cuts. So there's always another story you're trying to assess versus expectations. You're always in the now when it comes to markets. So you're always in the now, right? So yeah, so we've seen a few of these bubbles burst. That's my client advisor, Mark. He's a handsome, young-looking gentleman, ex-UBS Fidelity. Uh, he's a lead client advisor here. Really fantastic individual. Uh, and I think what's happening here is we're setting up for the great rotation. This is a call out from our newsletter. I like to trot this chart out from time to time. This is the ratio of growth stock value divided by value stocks. And you can see we're at levels approaching 2021. This is an outside in view of what's happening. And I think you're going to see a move to value. And you're seeing that today. Isn't that what Mr. Market's doing? What's leading? Healthcare, financials. There's really a bias to value in the names that are leading. And expensive names are not. And that means themes are also breaking out because the themes are expensive. Themes are expensive. I was listening to this podcast from, I listen to a bunch of podcasts, try to rotate, mix it up, and see what has an interesting title. If you find a good one, let me know, by the way, because I'm trying to figure out where to spend my attention, the most valuable currency in the world. I'm listening to the BlackRock Bid podcast. And they're talking about thematic investing. I'm like, oh boy. Every theme is expensive and nearly every theme has broken down. So take a look at GLP-1s with Novo Nordisk and Eli Lilly. Those broke down a few months ago. This was a fun ride we got out in April of last year when these stocks became more expensive than Microsoft. That's Novo Nordisk. Eli Lilly has done relatively better. But it's below their highs and still pricey. Defense stocks. Remember, after the tragic events of October 7th, defense stocks went on a one-way road higher. And now they are in a bear market, and you got to talk about defense spending getting cut 8% year after year. What are the other themes that are in the market? How about independent power producers? Look at Constellation Energy. It's part of the data center theme, down sharply the last few days in a row. Seems to me set up for a retest. Okay. So what other themes are out there? I mean, it's a highly thematic market. And, humans love a good story. The stocks that are most expensive are the story stocks. A theme is a collection of stories. It's really a story about a collection of stocks, I should say, right? So, it's not that these are businesses with earnings growth issues. They don't have those issues, and that's why the bull market's intact, right? The dot-com bubble ended when Costco failed to meet earnings expectations, right? So go out and buy your GPU chips for NVIDIA. But it's really overvaluation, over positioning, and we're just seeing the excesses from that get wound out. We saw that with China as well, right? Baba actually had good numbers, but China's down 10%, or Baba's down 10% and accelerating. By the way, I wrote about this over the weekend. I'll share my tab here. I said mean reversion and full force. This is really the theme in the market. It's about mean reversion, not momentum. We are in a momentum correction. This was Sunday, yesterday evening. I said, hey, check out the S&P versus other international indices. I do think a counter trend move is due. This counter trend move, namely international beating S&P, is due for a breather. And you're seeing that now, right? Look at US equities lagging international markets, which really have run ahead of the US markets. But these have run ahead so much that they are also due for a breather. And they ran ahead because US markets had an incredible 23 and 2024. They're expensive. So the market is just settling and going sideways and having these more rolling corrections. But we're now seeing momentum corrections in these hot themes. That's really what's happening. And mean reversion is working. So here's a name like in healthcare, seeing pharma names like Merck work 5 days in a row, for example. UHS, these are names I own, by the way. UHS, I bought some more this morning. I think that's interesting. It's also up today. HCA, these are healthcare companies. If you look at the valuations, like 12, 13 times. These are names I've been talking about really for the last few months, actually, right? So Nothing new there. But I think that's where the money's going. Money's going into these mean reversion ideas, and certainly healthcare would benefit from a growth scare also. But these are just great businesses too. They're great businesses, good valuations, and I don't think it'll be that easy to cut spending at the government level in these categories, even though I'm all in favor for that. It's hard to cut spending, hard to cut entitlements. So that's one. And then I think on financials, I think those are good areas too. Not necessarily the mega banks, but I think some of the regional banks are back again. This has been a tough category because it is a good consensus idea, actually. I don't know. I'm mixed on that. I go back and forth. I think a lot of the analysts aren't too excited about financials, but to me, it seems like such an obvious opportunity with all the deregulation and a strengthening consumer and banks increasing their lending. And the valuations aren't that bad, right? So I bought this morning UMBF Bank. That's right here near the 200-day moving average. We have multiple banks. Bought Axos Bank to right a tab beneath the 200-day moving average. A few names there, quite a few names there actually. There's no like one ring to rule them all when it comes to banks. I think it's better to spread across a few ideas there actually. So if you look at like Twitter momentum names, like that whole category is under an incredible amount of pressure, right? And I don't think many people realize that the bubble has burst, right? Like there are these people on Twitter that are pushing these awful stocks. Let me show you here's Palantir. We talked about Palantir. Palantir's a fantastic business. It's just the PEG ratio is like 6. It's absurd, right? Nuclear stocks is again a story theme, right? It's down quite a bit. This is one guy on Twitter. Let me pull him up here. Like you should not own like any stock this guy talks about. It's like that bad. I look at this, I'm like, oh my God. Shea Bull. Do you guys know this guy? I feel bad to call him out, but anyway. Feel bad and don't feel bad too at the same time. So like these ideas, these are just not all of them, but most of them are just, this is like hype chase idea names. These ideas are not good ideas. These are bubble bursting ideas. This is what I call animal spirits. These are lottery ticket ideas, and the bubble burst. So it's just not good to be in these kinds of ideas right now. You want to focus actually on value now. You want to focus on quality value. We see consumer finance names are pulling back and have pulled back. So they're finally getting interesting again today. Maybe it's early, I'm not sure. I think home builders, I still want to wait maybe another week or two, but I think they're approaching levels that are kind of interesting. Energy is complicated because if Trump executes a peace deal, I think he will be successful in that. Then you're going to get more oil production, which doesn't help oil prices, and so firms linked to energy don't do too well. I'm going to share my screen here, and actually, I'm going to share some of the internal technology that we use. This is a new screen we built last week. We have a 3-person engineering team. We're looking for more engineers too. But these are some of the tools we use to stay on top of things. And we're using more and more AI, which makes it even more capable. We're not yet to a fully autonomous self-driving investment platform, but that's the vision. We'll get there maybe in 9 months or a year. So, you can see different themes here and just, at a bird's eye glance, get a sense of where they are. Let me see here. So let's flip through a few here. Insurance, actually, I do think is interesting. There's value, there's earnings growth, the right trends. They're one of the primary drivers of CPI. That's not changing, right? Aging and longevity, good trends. These already corrected last year, right? So there's more reward than risk. The big cap financials, I think it's a great theme for the year, but it's just hard to get into where you are right now. Software's been correcting. it's been kind of destroyed really the last month or so. And I'm not too excited about that. Automobiles actually have not done so bad. I think consumers fine. GM's actually up today, the last 2 days. I don't think tariffs matter anymore. I think tariffs are all priced in. Housing stocks, I think, are just very, very low. I think this is a very interesting category. It might be a little early though, so I'm just giving it some time. So restaurants have been obliterated. Take a look at restaurants. I mean, it's one of those things where, hindsight's 2020, but I mean, did it make sense to buy Chipotle Mexican Grill at a forward PE ratio of 40? It's still at 40, still pricier than Nvidia. Look at this. It's a lot of damage, right? What about Kava? Kava is at 177 forward PE, was at 300 back here. I mean, these are logarithmic charts. So it's very deceiving. By the way, this chart, this bar here is when Kava reported earnings. How devious is that? Mr. Market is devious. They had blowout earnings. They have blowout earnings every quarter because it is a great business, but it doesn't matter. And Chipotle Mexican Grill is also a fantastic business. They're both great compounders. You should not buy salad at Kava. You should buy stock. Well, you should have done that 2 years ago, I guess, right? Don't do that now. Now just go buy your salad. Enjoy a salad. When these things get cheap one day, as they inevitably will, then they're good moves to make. Look at Wing. Whole restaurant theme is in correction. So, the 62 times forward PE ratio, had an incredible rally. This is what a bubble burst looks like. You get to see, this is what bubbles bursting, this is what it is right there. So the key is when a bubble bursts, you don't want to martingale on the bubble bursting. What does martingaling mean? Martingale is this concept from betting and poker. If you've ever heard of like Kelly Bay and all the rest. Martingale is you go to roulette, say in Vegas or something. And by the way, I never gamble in Vegas. It's negative expectancy, negative EV. You shouldn't do that either. At least play poker with your friends. At least you have a shot then, and you'll both enjoy it, right? That's positive EV. You get social EV, right? I'll do that. Now, if you lose, let's say you bet on black and you lose, you double your bet on black. You just keep betting on black until you win. That's a martingale strategy. The idea is that eventually it'll come up black, and then you get all your losses back because you keep doubling your betting. That strategy doesn't work. The strategy will not work. You can make a little bot with AI and test it out, and eventually you will blow up. You'll probably blow up faster than you think, even probably within like half an hour, 45 minutes. So the mistake people make is that they're too close to a sector. They know it too well, and they buy the dip and the bubble is bursting. And then they ride the bubble down. That's the mistake people make. When Druck rotates out of a theme, he doesn't look back. He's on to another theme. When he sold out NVIDIA, he sold out early in April, but he's not back. That's just an example. That's not a critique of NVIDIA. I own NVIDIA actually, right? I'm just giving an example of what a professional investor does. Because it takes 9 months to a year to work out that excess. It's like you got a wet, soggy towel and you got to squeeze it out. And take a look at airlines, right? We bought airlines last week. This is one of our 13F takeaways, right? American Airlines Group up. Delta, I think Delta is slightly better actually. It's up today. Look, one day doesn't make a trend. But these names weren't going anywhere. I guess they were going, well, there's a lot of volatility. But in 2020, 2023, 24, there's slight uptrend. And only recently have, attracted some momentum, and they're still cheap at a 8.14 PE and growing earnings. I don't think that's a slam dunk, by the way. I'm just giving you an example of that's where I would buy dips. I would look for dips for entries as opposed to martingale in a bubble that's collapsing. You don't want to do that, right? It doesn't matter how good the business is. It doesn't matter. It does not matter how good the business is. Okay, so what else? I think there's some themes that I'm looking forward to buying on a pullback. We've been critical on industrials. You can look at my prior podcasts about that. This category is getting more interesting. It's not there yet, but we are officially stocking this category now. That means we're waiting. We are waiting for a good entry. Still too early, seems like. Still too early, but there are opportunities are setting up. Travel and leisure. This is a bubble, right? By the way, did you hear about all the Canadians canceling their travel to the United States? That's probably not good for these stocks. Probably not good for travel and leisure. That's not why we don't like it, but when you can confirm what you see here with some of that news flow, then it gets, you might have higher conviction around that. Like, I don't like what I see with booking.com. It is a narrower market, and many themes are kind of deflating and in downtrends. So that's what we see. That's what we see when we look around. We cover, as you can see, if you're following online, you see the screen here. I'm going through different themes, and many of these themes are kind of have a pierced bubble and are deflating, right? So, as I mentioned, I think there are pockets and opportunities in healthcare and financials, but I do think you kind of be cautious. Like, we are due for a good bounce. We bought stock this morning, in fact, but the data center theme is still weakening. That's a primary theme for the market. So the market will look for direction from NVIDIA. We'll obviously be all over that. We'll take a close look at what's happening. I think within technology, Taiwan Semiconductors may be one of the few mispriced assets where it's got like a forward P of 17.7 and 20% year-over-year revenue growth, and NVIDIA is going to keep spending. And the hyperscalers are spending too. The question is, for how many years out will they keep spending? That asset looks mispriced to me. I wrote about that in our newsletter. Let's take a look at TSMC. Now, it doesn't mean that I can't go lower and so forth. It's down 3% today. Let's take a look. But this one is interesting. I would say within technology, it's hard to get excited about many things, though, right? This is TSM. So, I think it's cheaper than all these other ones. But look at Amazon. Amazon's going through its own correction as well, right? So, Microsoft hasn't gone anywhere. Microsoft's getting more interesting, but it's still a little expensive at like 30, not a little, 30 times PE. And why wouldn't I just buy TSM? So I think you could expect more of this kind of phenomena this year, by the way, and that's okay. Bull markets have that. Many people think the 2010s were just an up and to the right phenomenon. That's not true. It's not true, right? You had a 2011 debt crisis. You had the sequester correction. You had like the December 2018 correction. I think in 2013, that was a year that almost went nowhere. So, but the 10s were overall a bull market. It was a bull market, and we have a bull market now. We have earnings growth. The policy is to lower oil and gas prices. That's going to help. The policy is to lower deficit spending and lower long-term rates. That's going to help. And I think real economic activity is increasing. I think interesting ideas are things like breadth expansion ideas. So apart from the only two really themes I would say would be, as I mentioned, healthcare and financials, but finding stocks that aren't necessarily part of a theme, but just are great businesses that look like they're mispriced, have earnings growth, like a staffing company, right? I'm looking at this one stock right now as an example. Let me pull it up. It's not linked to any theme. It's just like a good business. Like we're stocking this one here, RCMT. Let me just pull it up. But this is an example what I mean, where I think you're back to a stock pickers market, like a bottoms up market. This is RCMT. It's got a 7.1 PE ratio. It has double-digit earnings growth. And let me see here. They're buying back 7% of their stock. Their ROE 60%, so they can grow if they need to, invest in themselves, right? The price sales ratio is 0.5. Okay. Like, I think there are a dozen names like this, more than 2 dozen names like this out there, Here's another one, Ryder. These are technically both industrial stocks, by the way, but you want to think of them as industrial stocks, right? They're commercial businesses. Rider is linked to it's cheap, it's growing earnings, it's got a nice trend, nice momentum. But what's talking about? It's not part of the theme per se. This is the point I made. I made a tweet earlier today. I was like, hey, forget about the themes. The themes are expensive. Everyone knows the themes. The fact that people are aware of them made them expensive. So it's time to focus on mispricings at a security level. I gave one example in tech. I think maybe Taiwan Semiconductor. Yeah, I think that's the kind of market you're in for this year. You're not going to get the kind of 24% back-to-back years in the S&P this year, but you'll get an up year. And I think you need more caution around some of these exciting themes, including data center, actually. I think I would expect a near-term rally in the next couple of days. We're net long now. We were net 80% last Wednesday. We're net long 100% right now. But I would expect a rally, and I would probably sell off or reduce exposure to some of these themes. That's kind of my game plan right now. But, I might revise, might adjust. That's our thought process as we see it today. Okay, so let me know if you have any questions. Look, what would change my view is if prices get cheap and if there's panic, then I'd be interested. We saw the VIX fear gauge, as it's often known, get to 18, which isn't bad, but it's not great. It's at 19 now, 5%. Okay. Oh, markets are closing hard down today. That's actually good. That's actually bullish. As strange as that sounds, it's so bizarre, isn't it? If we get a good red day today, I'd be even more bullish for the rest of the week. So, yeah, the S&P's down 40 bips. The Russell's down. The Dow is up, and the Dow is more of those kind of breath, like economic breath, boring stocks people don't really talk about. They used to talk, but they don't really talk about now, right? Let's look at the holdings in the Dow. So there's a quiet bull market and those kinds of ideas, right? So that's where I would focus. Funny thing about Baba in China, right? I mean, the event that put a pause in the China rally was the fact that just Baba reported earnings. That's it. The earnings are great. Didn't matter. That was the event. Now markets, what are they looking forward to? The event happened, right? We saw this with NVIDIA at their conference not too long ago. This happens time and again, right? And if you look at these other emerging markets like Brazil, I'll show you like kind of what we're looking at here on our side, right? We're always triangulating across multiple different views. This is Brazil, right? We saw this. We said, yeah, okay, that's probably time to get out of Brazil right there. Still a good overweight for the rest of the year, though. It was just oversold, and the S&P was overbought at this time. In fact, I think I have a chart that shows this here on our platform. Let me go find that for you. Actually, not I think. I know we do. Let me share this with you. So this is a chart of the S&P 500 versus the EEM, Emerging Markets ETF. And this is, let's take a look at this date. That's November 14th. That's when the ratio of the S&P versus emerging markets was 2 standard deviations plus overextended. That's November 14th. And now here you are kind of February 21st on the opposite side. It's like ping pong. So let's take a look at what happened on September 14th in the S&P. Or December 14th. Or sorry, no, November 14th. There we go. So that was November 14th. That was sometime after the Trump election win. Markets got really excited. And then the rotation to international really started on that day, right? And if you go to here's emerging markets on that day when that ratio was extended. There was the bottom for EEM, and now you're on the opposite side of that, right? Let me go add a little red line here. Okay, and that's what happened recently. So hopefully it gives you some perspective of how you're trying to combine. When you try to arrive at a view on position, you got to look at multiple things. It's complicated, right? Fundamentally, though, earnings are going up. I think consumer psychology is improving. China house prices are going up in certain regions. That's real macro data. It's happening, right? AI has reinvigorated stocks in China too. So, but you gotta wait now for a better entry. And in fact, a counter rotation back to U.S. stocks that could very well be in order. The question is where, and I think we've discussed that, right? Some things you can do to kind of mark time, meaning like get a sense of when things are oversold, is I would look at the IWM because that's a pillar for animal spirits, right? The IWM has a lot of weak companies, has a lot of biotech stocks in there, unprofitable stocks. This is right at the 200-day moving average right now. That is, if this correction is supposed to stop somewhere, now is one of those mile markers where it could stop. If you take a look at SMH, Semiconductor Index, again, this is really the exemplar for the AI theme, the primary theme of the market. It's also right near the 200-day moving average, okay? So that's why I'm more bullish where we are now. How funny is that, right? Most of you are probably like losing your shit right now. I think that's the vibe I get talking to people, but you should be more bullish now. But I think it's complicated, as I said, because you have these crowded themes. You have these very crowded themes, and when the bubbles burst, it's like Humpty Dumpty. It takes time. It takes 6 months. Think about like semiconductors. When semiconductors peaked last June, and I made this mistake too. I bought a little too quickly on ASML, and then we cut our losses, moved down. It takes time for that excess to get worked out, right? So, but the deeper the drop, the better the opportunity, right? Anyway, I hope that was helpful. Keep the questions coming. I didn't get many questions actually. We got a comment around Doge. Yeah, look, the Doge, like I think cut some more. My first job out of school was in management consulting, and I got to see how world-class businesses operate. Informed me as an investor today. I could see American Express, world-class business. Then I saw some other businesses that I shall not be named, and they checked out on Friday. This is before COVID. This is like, so I'm sure there's a lot of ways. Apparently like half these people still aren't coming back into the office. How does that make any sense? And the people that run those agencies should be accountable. They are the leaders of their organizations. It's more than an email from Elon Musk. The leader of the organization should be saying, get in the office, and if you're not, I'll hold you accountable. That's how the real life works, right? Okay, payments. I'm just not excited about payments. It's too crowded. Look, there's some very interesting bargains and opportunities I see emerging, like the buyback rate on PayPal. Like I've looked at that, yes, but the overall category, I'm just not there yet. And instinctually, I'm not as interested in names that people talk about on Twitter. That's just how I'm built. It keeps me out of trouble. It keeps me out of opportunities too, but I'm confident in my idea generation. So I'd rather find my own idea because I have a better sense of where I am in the information dispersion, right? So if I read someone else's idea, am I the last person to show up at the party? Am I late momentum, which is what you don't want to be? Yeah, I am. I'll talk more about this digital assets on the Bips and Bits podcast shortly. I think Ethereum has some relative value performance opportunities here. By the way, I don't know what word to insert here, but how strange, bizarre, weird, funny, paradoxical is it that North Korea owns more Ethereum than like Vitalik? I mean, that's kind of wild, right? But yeah, I think that's that. I mean, look, I think what you see here in digital assets is this was a canary in the coal mine, right? Let me pull up Bitcoin here. So let me share my screen. It's good to look at all these asset classes, even if you don't want to invest in digital assets, because all these asset classes are connected, right? You had, let's see, right here was December 19th. That was the Fed hawkish cut. That was a local top in digital assets, right? If you look at MicroStrategy, this is a levered version of Bitcoin. that's been down, that's been correcting today. So this is that peaked on November 22nd. This is really the leading indicator for everything, right? And that was one of the first markers of animal spirits bubble collapsing. Then it evolved and kind of metastasized into Palantir correcting and plenty of other names too, right? So I'd just be cautious of animal spirits and don't buy those dips. I don't think that's a good move. Anyway, core is like I'm not even looking at that chart now, right? Why am I going to look at that chart? I know that's a hot name. It was a hot name, and let's take a look. Obviously, the answer has been down, right? I mean, and again, a lot of people talk about look at this. This is these are all animal spirits. It works great for a few months of the year, especially in Q4. It doesn't work most times of the year, actually. So, it doesn't mean that you're not going to see a bounce there that suckers in a few more people and creates some hope, and they wait for it to rise higher before they sell, but it never gets high to their high point, so they sell and it keeps going down. That's what these things happen, right? It's all about the psychology of the individuals that hold those positions, right? So this is a really good question. What's the KPI I'm looking to for themes are played out and time to go by? Well, I just see a lot of themes are weak and have rolled over, and they're crowded and they're also expensive. That's it. There will be a time when that's not true, right? Right before the November 3rd election, all the themes were cheap and had excellent entries. The problem is that, I call this concept the hot ball of liquidity. The problem is that in a 2-month move, you had the returns of like a year and a half compressed. So the average annual return on the S&P 500 is like 9% or 11%, depending whether you're using real or nominal, right? If you include inflation, it's 11-ish, I guess 12 now, right? So the problem is that you get these compressed moves in short periods of time that take an asset from offering relative value to overpriced. I mean, you can see that in a day. I mean, we've bought stocks and 3 days later it's up like 15%, and then we want to sell, we're not trying to do that. We'd rather get long-term capital gains, but like I'm responding to the market. Imagine like a sine wave. A sine wave is like this, right? What's happening in this part of the cycle is more acceleration of that sine wave, which, meaning things go from cheap to expensive, expensive to cheap, cheap to expensive very quickly. That's what's happening, this compression. And that is because of retail trading, retail investing, and there's 1,000 people listening now. You're all a part of that too. It's because investing is social now, the way information moves. That's what's causing all of this to happen, right? It really started with COVID in 2021, and it's changed investing. This is why Buffett missed the bottom in October 22. I mean, he bought stuff, but he also sold stuff like Delta. Like the October 22 bottom wasn't at levels that you historically see at bear market bottoms, because individuals bought the dip, right? So you have to adjust with that. I mean, the best performing themes last year were animal spirit themes, like MicroStrategy, like all those names I just showed you. So you have to incorporate that. So we track it. We track it every day. I want to own those names at the right time, right? And find the least worst idea in those names. Like Dave was a great example of that, actually, right? I still think it's better relative value than other fintech lenders, but it's a relative value kind of game now, right? It's a great handle, by the way, Wizard Friction. Have you guys read Brandon Saunderson? Oh my God, this is a fantastic fiction writer. So good. You just won't see your family for like 2 weeks because you'll just plow through all of them. General thoughts on European. So I think European markets overbought right now too. I think there's some opportunities there in the European banks. I think everyone knows there are opportunities there. At least smart money knows there are opportunities there. So, I think that will keep working actually, because it's not letting me get good entries. So, that's a good sign. But I think European banks are interesting. But America has the best companies in the world, the best earnings growth. I think you got to get on the other side of this kind of excess, and there'll be good opportunities here. Look, I saw a bank in Italy that's doing well. I think banks in general in Europe are a super interesting theme, I would say, and no one's talking about that, right? I've seen in a few of the 13Fs. That's interesting. But here's a name I bought today. This is an interesting idea too. I think I mentioned this before, actually. Virtu, right? So Virtu, I'll spend one more minute on this, and I got to run. But let me show you Virtu. So Virtu is this market maker, right? They do market making for ETFs, and when you buy and sell a stock. So this is this still, it's cheap, 10.4 PE, trailing 12. So that means it's got earnings growth. It's up 100% in a year. It's got momentum also. And within the capital markets theme, capital markets are things like NASDAQ, NDAQ, right? It's much cheaper than all of them. That's called relative value. These are things I look for. Jefferies has corrected. Jefferies was a very hot stock, up 158% in a year. Imagine how much it was up before this correction, right? I'd still rather buy Virtu, right? That's just an example of opportunity. There are opportunities out there, but you got to turn over a lot of rocks and find a lot of themes. This is a sign of where valuations are today. Like the higher the valuation is, the difficulty level of the game increases. Like mistakes are punished much more severely, right? So I mean, think about that. Like Meta had a 21-day record streak after fantastic earnings. The fact is, it had fantastic earnings every quarter, the last 4 quarters. The market just figured it out one day. They figured it out because more people are spending their attention on the market. More people are in the market now. They're also on Twitter, and they say, "Oh, Meta stock went up. Let me go buy," and it gave back those returns very quickly. That is, if you're contrarian, I think you can do better. If you can control your emotions, I think you can do better here. But look at this. This is Meta. This is the day it reported earnings right here. It's given all of that back, right? This was called like a FOMO rally, right? People trying to get into position, they can't. They wait the next day. It keeps going up. They can't. They throw in the towel. They go buy. That's what creates that dynamic, in my opinion. That's my interpretation of that phenomena, right? Which I think is pretty accurate. Actually, I think that's what happens. So, all right, we'll call it a wrap. Thanks, everyone. Hopefully, we'll get to do this again next week. I still want to go through more 13Fs. There's so much good stuff in the 13Fs. So I think it's more important to focus on a market positioning round right now. I think that's a better opportunity to focus on that. I mean, this is going to be, I think the next 2 weeks will be, very tactical, a lot of tactical asset allocation adjustments. So, all right, have fun, be well, make a great week. Take care. Thanks for joining me. And again, you can follow this on YouTube. Look up Lumida Non-Consensus. You can go on Spotify, Lumida Non-Consensus, or Apple, or where you listen to your favorite podcasts. Thanks again. Be well.